The behavior of Bitcoin in the markets remains on tongues among financial analysts, investors, and very passionate fans of cryptocurrencies. Lately, Russian experts have shared their insight on the current Bitcoin bull run, stating it may never actually turn out the way it did back in 2017. There are many factors to be analyzed regarding how such factors influence Bitcoin's performance and the implications for the future, summarized by an analysis done for the Roscongress Foundation. According to the Roscongress Foundation, the new price peaks of Bitcoin that emerged in March 2024 are overwhelmingly speculative. The fact that spot Bitcoin ETFs were approved, and many believed that this time they bring something new into the markets, hence created a very strong incentive for speculation activity. The approval was also not as vigorous in public as it was in the 2017 bull run. Online searches for Bitcoin and other cryptocurrency-related topics are leading to a quantity that continues to remain far from the peak during 2017. That quantity, not only in the decline in online search but also in such interest in general, insinuates a read-across of a much less involved public in the current bull market. Michael Novogratz, founder of Galaxy Digital, further commented that Bitcoin could be stuck in a tight trading range for the current quarter, thereby emphasizing a more tempered market outlook. Indeed, one of the major expectations from the introduction of spot Bitcoin ETFs was that they would make it possible for more people to invest in cryptocurrencies. That remains yet mainstream, as argued in the first paper. According to the authors, this is because of the underlying complexities characterizing the Bitcoin network, particularly its mining-based transaction protocols, which cause major integration challenges with the conventional financial system. As part of the explanation behind how Bitcoin democratizes investments, ETFs could potentially do the same thing because right now, the infrastructure and perception toward Bitcoin as a high-risk asset are already equal to that of tech stocks. The tie of Bitcoin price moves to the stock market, rather than safe haven assets like gold, continues to place Bitcoin in the category of speculation. The truth is, the relative reaction of the market to the event of Bitcoin halving that occurred in April 2024 was very mild compared to previous such events. Talking of changes in the dynamics of the cryptocurrency market, where price movements could be determined just partially, or at least in part by the general appetite for risk in financial markets, this mild response speaks to a development in the dynamics of the cryptocurrency market. The report itself embraced long-term potential in improving market accessibility for Bitcoin ETFs in the spot market, but its outlook was cautious. It pointed out that temporary spikes in price levels right after the approval of ETFs were mainly due to speculative trading, while the broader impact on market dynamics is yet to be seen. The forecast differs according to the number of prices in different scenarios for Bitcoin at the end of 2024. Ranging from the lowest to the highest, this reflects the uncertainty and volatility that coins can bring into the market. Their predictions go from a high of $121,764 down to a low of $50,138, showing a diversity of notions between the analysts. Also, the paper investigates how stablecoins influence the dynamics of markets for Bitcoin. Since their introduction in 2017, capitalization has been growing dramatically, with this considered as one of the reasons for the bull markets both in 2021 and 2024. The relatively stable value of stablecoins fills the gap for investors seeking to minimize volatility at the same time as participating in the cryptocurrency market. Other experts have posited that the recent uptick in Bitcoin prices comes from a restoration of the supply of stablecoins. This essentially underlines the point that there are intricate relationships within the cryptocurrency ecosystem, such that how one asset performs can make others break. All in all, the report by the Roscongress Foundation presents a balanced view of the ongoing Bitcoin bull market. While on the one hand, it does admit that price gains of late have had speculative drivers and further challenge Bitcoin integration with the traditional financial system. On the other hand, the report outlines long-term pros of innovations like spot Bitcoin ETFs. These changes in stablecoins' role are making market dynamics even more complex and point toward performance drivers for Bitcoin in the near future coming from a mix of areas. Upon the maturation of the cryptocurrency market, investors and analysts will have to be complex enough to sail through such waves for making the right decisions. The lessons from 2017 together with the structure and the characteristics of the market right now give us insights into potential trajectories for Bitcoin and the other digital assets. Whether Bitcoin breaks above its previous highs is a matter of speculation, but what it has done to shape the greater future of finance is undeniably profound.